headline that the globe is eyeing today is what Trump prefers to call Liberation Day, and it's really a matter of debate whether it's that or it's a recession day, like one of our economists joining us on the show called it. The day is being seen as a watershed moment for sure in the global economy. Trump hitting the globe with extensive tariffs. And he said he's being kind on some of these countries by charging roughly half of what they charge us, India being one of them, he said. And he's called these discounted reciprocal tariffs. He said the US is going to charge an import duty of 26% on India, 34% on China. And speaking about India in particular, he described tariffs by New Delhi as very, very tough. Trump went on to allude to the friendship between him and Prime Minister Modi. And even as he said that India has not been treating US right, he's gone ahead and slammed those tariffs. Moving on to the European Union, Trump has announced a 20% levy on imports. And for the United Kingdom, 10%, which means two of the main trade partners of the US, these allies of the United States, they haven't been spared either. While announcing the most aggressive reciprocal tariff policy now, Trump is saying that it will usher in a golden age for America. But to decode the implications of this economic jolt, let's connect with Dr. Richard Benkin. He's an American human rights activist, a journalist and writer, and he brings deep insights into global policy and its ripple effects. Dr. Benkin, welcome to Business at 9. Let's get straight to it. How do you read this moment? Is this about protectionism? Is it about politics? Is it plain old power play? What do you think this is?
Well, thank you for having me on your show. I appreciate that. I think the first thing we need to recognize is that we're at the beginning of a process, not at the end. You know, I've been investing in the stock market for a number of years, and I found that if you look at it every day or even every week sometimes, you'll drive yourself nuts. There's always volatility. There are times it's going to go up, sometimes it's going to go down. So I think the first thing we have to do is recognize what's important, what's permanent, and what's not. I will say that there are a number of things that went into this, and you've actually alluded to several. I think the first thing we have to start with is that maybe your viewers are not aware, but currently the United States spends more money every year just paying interest on its national debt than it spends on national defense. And that's certainly unsustainable. And if we want to talk about disruption, economic chaos in the world, imagine the economic chaos that would ensue if that debt monster grows to a point where the United States can't handle it anymore. After all, we are the largest, the strongest market for international and our own domestic goods. So I think the first thing to understand is I think President Trump is really trying to do something about it. Certainly, trade imbalances have a lot to do with that national debt. So I think that, you know, let's put everything in perspective. Let's not get too carried away by immediate events. And two, let's recognize that it can be a lot greater harm if we don't get this national debt under control. And this is part of a larger program of the current administration.
But Dr. Benkin, do tell us, what's the end game over here? As far as Trump is concerned, you're looking at the impact playing out in the markets. America, as such, has been known for free markets. But does that ideology change completely now with this move?
Yeah, interesting. You know, we kind of have stops and starts with that. In his announcement of these, President Trump talked about how up until around 1913, the United States was known for having a lot of tariffs on goods. But yes, you're absolutely right. We certainly take pride in being a free market and a place where people can engage in the marketplace without having to deal with government intervention so much. So I think you're right when you say this is certainly different from that. However, I also would add, when I say we're at the beginning of the process, we know that these tariffs that have been announced are kind of benchmarks. Several important countries, important allies of the United States, most important, I think, India, have talked about how they're going to negotiate going forward and what might be carved out, how these things might change. You know, so, and again, when we look at a country like India, I think the first thing we have to understand, besides President Trump's fondness for Prime Minister Modi, is that the U.S.-India relationship is so much greater than trade alone. And you know that the trade negotiators who have already agreed now on a format for negotiation, they're going to be considering so many other factors than just trade alone. I also think as an example of that, which could be a plus for India, whereas India was hit with these tariffs, China was hit with more. And we've already seen how there's been an attempt and a successful attempt to attract several large corporations that are leaving China to come and do business in India. So I think if we look at it in that greater context, we can see that this could actually be a big plus for India. And I hope, quite frankly, I really hope it is. I really hope it is.
That you say that because we're 26% as the tariff shocker and 34% as far as China is concerned, Dr. Benkin, one would imagine that this is a negotiation play. This is a power play. And of course, there is a warning sign over there as well when they start negotiating. And already we're talking about a bilateral trade deal between India and the US. So how do you think this is positioned if it is indeed that, if this is a negotiation ploy?
Well, and again, I think people have found this out about President Trump. So many of the things he does and says, just like these tariffs, really are the first step in a wider negotiation. And I think we should understand him within that context. By the same token, he also has shown that he's ready to actually do these things if that negotiation is not successful. And for instance, we saw that in the Middle East. It wasn't on trade; it was on the release of the hostages. But that, in fact, he was willing to bring down the hammer when necessary. So, but I also think again that and I'm pretty familiar with India and the government, that the Indian people, the Indian government, are smart enough to engage in that kind of positive negotiation. Also, if you remember when Prime Minister Modi visited the White House, President Trump, who doesn't normally do this, pointed to your prime minister and said, he's a tough negotiator. He's a better negotiator than I am. So I look forward to very productive negotiations between the United States and India that are going.
But Dr. Benkin, do you see, as far as Trump and the American administration's moves towards trying to get good negotiations going that would benefit the American economy, but the hit, the gambit, like many are calling it, could really backfire? So is he really playing with fire at this stage with the kind of tariff explosion that we are looking at right now? How real is the threat of an American recession? Because that in itself can change the game for several emerging markets like India.
Yeah, I don't think there's any real threat of a recession. There could be a slowdown. There might not be a slowdown. Certainly, I tend to oppose a sort of across-the-board tariffs, for instance, that were announced on cars and steel, aluminum, things like that. However, if they have the effect that President Trump intends them to have, and we don't know that they will, but if they have that effect of bringing businesses back to the United States, creating jobs in the United States, creating economic activity, then in fact, they're going to have that positive effect and they won't lead to recession. I think the other part of this is that for the average American, not just myself, but for the average American, President Trump's argument that trade imbalances have been significant and tariffs have been out of balance for years and years and years, and that, as he put it, we let ourselves be taken advantage of. By the way, when he said that, he emphasized in his speech yesterday, we've let ourselves be taken advantage of. He said several times, look, I don't blame these other countries. They're doing what's best for their people, and he expects each country to do what's best for the people of that country, including the United States. So so for the average American, I think when we hear that country A puts a tariff of, say, 25% on an item, and we haven't been charging any, we've been charging like 5% or whatever on the same item, I think the idea is that, well, geez, you've kind of set the benchmark, and we're not going to do anything different. We're not going to punish you. We're just going to do the same thing that you've said is fair. So again, I think from a domestic American point of view, I don't see that problem. Again, we will have to see if, in fact, these efforts do bring that business back to the United States, do rebuild our manufacturing base. I want to bring up one thing, if I might, that I think gives it's a good example of just how complex these matters are. I've been working with a company, it's a foreign company that wants to build in the United States. And that's exactly what
Yes.
President Trump is encouraging companies to do. Build in the United States, create US jobs, generate economic activity. And this company has also said that wherever it's possible, it will get its raw materials from American producers.
But
So
Dr.
it's not
Benkin,
creating,
that
so
brings up a
also,
very important question. What you're saying is that, factories will be built. Manufacturing is going to happen in the United States, something that hasn't happened over a long period of time. And we're talking about several sectors. But Rome wasn't built in a day, and factories, too, can't be built over a day. So in the meantime, there is going to be impact, and there's going to be an economic fallout, don't you think?
yeah, absolutely. And in fact, the president has warned about that and has said that, in fact, there's going to be some initial pain. I think how successful he is and how successful those all important negotiations are going to determine how significant the pain is and how transitory it is. Again, I want to I want to point out that the markets that we're looking at today, yeah, they're bad today, but markets are volatile, and if you look at them every day, you're going to go crazy. I could see them rebounding at least somewhat, and then depending on how successful this program is, we'll see just how soon the market rebounds and how high it goes. But I want to mention with regard to that country, the problem is, and this is the key with these sorts of tariffs, there are certain raw materials this company needs that it can't get from U.S. producers, so it has to import it. And it's looking at a significant uptick from maybe 2% tariffs to 20% tariffs, and that's giving it pause, making it wonder if it should, in fact, build in the United States. And that, in fact, is something that's got to be worked out, or, in fact, these tariffs are not going to have the impact that they're intended to have.
Benkin, the other market mover is going to be the Fed's rate cuts. Do you think they'll act sooner? They've been pretty cautious about rate cuts in the past, but now with these kind of moves from the Trump administration, do you think they'll act faster on those rate cuts?
I don't think so, and I'll tell you for two reasons. One, I mean, I've heard I've heard members of Fed say that they're not anxious to touch the rates right now, and more importantly, or at least equally with that, this what happened yesterday should have come as a surprise to absolutely no one. President Trump he was talking about it on the campaign for months, and he's been talking about it almost since the day he came into office. So I think the Fed has had time to think about it. This is not good. What happened yesterday is not a shock to the Fed. And so again, and as you point out, rightly so, sir, the Fed tends to be cautious in what it does because it doesn't want to inordinately mess around with the economy.
But Dr. Benkin, since you mentioned the other moving piece, which is about Trump's friendship with Mr. Modi, how much of that do you see as just political theater? And how much of that is serious economic strategy, you think? It's going to be an important piece as we discuss this trade deal as well. So since you brought that up earlier, I thought I should ask.
Yeah. Oh, I think it's a bit of both. But I think the bond between Mr. Modi and Mr. Trump is real. We know that both people value that kind of relationship, value that kind of loyalty. But even more importantly than their personal relationship, they, as so many people in both of our countries, recognize the importance of a strong U.S.-India relationship, which is not going to be strong if one country is reeling because of the actions of another, and that includes this. Now, I'll mention something else that could be good for India. For instance, commerce is all about what your options are, what your alternatives are. And we know that, let's just take garments, which is a big export for India. Other garment exporting countries, and I'm thinking of Bangladesh right next door, they're facing higher tariffs. And they have an economy that are higher tariffs than India, and they're facing an economy that doesn't have the diversity to sustain those sorts of tariffs, which the economy of India does. So again, how these things get negotiated could prove extremely beneficial to both the United States and India, and I believe they will.
Fair enough. But meanwhile, with the US dollar weakening and investors rushing to gold and bonds, what does that tell you about the real fear factor in play right now, Dr. Benkin?
Yeah, well, I agree. Whenever there's uncertainty, and that's what we're dealing with, right? I mean, as I said, we're at the beginning of a process, so we're dealing with uncertainty. No one's exactly certain how this will work out. People can make projections and say things based on their own personal point of view, but there is uncertainty. And traditionally, whenever there's been uncertainty, we've seen people run towards precious metals like gold and silver, and they've been going up actually for some time, just in the lead up to this. And of course, they're going up again today. I do not see that as a body blow to the US dollar. The US dollar is going to remain strong. Let's also remember, again, I don't know of any company, and I was in business for a long time. I don't know of companies that are going to just voluntarily say, well, all right, we're going to give up the biggest consumer market in the world where we have a piece of it and let someone else take it. So in other words, there is also that carrot to companies around the world, whether they relocate in the United States or stay in their countries of origin, that there's a large market where they can make a lot of money. And that means maybe they can cut some of these prices because of the tariffs in order to be competitive and make money. But again, that's the sort of thing that's only going to play out in the coming weeks and months.
We will be watching everything that happens in the coming days and months, Dr. Benkin. We are trying to understand the full impact, and the markets are also just about absorbing it. But there's one takeaway from today. It's that the world is now on high alert. Markets are reacting, governments are recalibrating, global trade as we know it is shifting very fast. Whether this is a short-term storm or the start of a new economic order, that's something that we'll be watching. But one thing is certain, that India, like the rest of the world, needs to brace for impact. Dr. Benkin, thank you very much for joining us here on ET Now on our show, Business at 9. Pleasure having you with us. Meanwhile, we're watching the full... Yes, thanks very much. We will, of course, keep tracking the full impact and how it really plays out. But what